Moody's Investor Service has downgraded the government of Ghana's long-term issuer and senior unsecured debt ratings to Caa1 from B3 and changed the outlook to stable from negative. Both domestic and external factors underpin Moody's assumption that Ghana's debt costs remain high, including high inflation, 12.6% most recent credit rating for inflation, and Moody's expectation of tighter monetary policy globally. The government of Ghana has formally appealed the credit rating decision based on the following metrics. Let's take a look at some of those right now. They say that there's omission of key material information from Moody's rating. They also question the experience of Moody's primary credit analysts, and they claim that there are very far-fetched conclusions on their ESG goals. More on this story just in now. The African Peer Review Mechanism, APRM, an autonomous entity of the African Union that supports African countries in the area of credit ratings and undertakes routine reviews of ratings outcomes assigned by International Credit Ratings Agency on African countries, has come out in support and corroborated the observations made by the government of Ghana in its statements, which highlights, according to them, significant fundamentals that contradict the downgrade action of Moody's. Joining us now, Kweku Adobili, Finance, Culture and Systems Analyst from Accra, to discuss further. Kweku, good morning to you. Thank you so much for joining us. What do you make of the Moody's downgrade and the subsequent response from the government?
Rhodas, good morning. You know, there's an old folktale in market circles that rating agencies always rate after the market has moved, not before. This case is no different. Ghana's spread started widening in September last year. And market participants, desperate to close down some of their exposure, were already calling for Ghana to return to the IMF for support in September. So we were expecting a downgrade, especially when Fitch downgraded Ghana from B to B minus just 3 weeks ago. It was only a matter of time before Moody's or S&P came in with another re-rating. So it wasn't a surprise. It was expected.
So when you say the markets were expecting it, is there still cause for alarm concerning Ghana's fiscal structure?
I mean, yes, of course. Ghana needs to find money. We have an excessive debt service to revenue levels in the mid to high 45%. I think Fitch and Moody's used 47% as our debt service to revenue level, which is one of the data points that's being contested by the Ghana government. The hot money that's been coming to Ghana since 2016 has caused a lot of this problem, COVID or no COVID. If we continue to pursue Eurobond issuance and FDI and capital coming from outside in dollars, then it's highly likely that we will continue to see these problems where our debt gets too big and our debt service levels get too high. So there is cause for concern because Ghana can't go back to markets at these levels. So it has to find alternative sources of cash, or it has to find ways to save money. And right now that looks very, very difficult.
So what do you make of the government's response, calling into question, for instance, the experience of the Moody's analysts and saying she's never visited the country and so on and so forth?
I mean, look, it could have perhaps been said a bit more elegantly, a bit more diplomatically. I get the impression that what they were trying to say was that because Ghana is such a beacon, such a high-profile economy in the sub-region, and a guiding light to the rest of the other economies in Africa, they were trying to say that it's important that Ghana was properly considered by a properly senior person who perhaps couldn't be influenced or pushed to reflect the market prices, right? And perhaps the Ministry of Finance think that it's marginal, right? The thing that got Ghana to the C rating was the governance rating that was applied. It was governance level 4, which is a very low governance level, which kind of indicates that there's a lack of transparency over spending and a lack of communication, and not as much confidence that Ghana has got the governance mechanisms because of what's happening in Parliament over the e-levy, etc., over the passing of the budget, etc. I'm not surprised by Ghana's response. That it's also political. It's important for Ghana to stand up at this moment and use this crisis to say, look, the way in which African countries have been treated in terms of the debt premiums that are being paid are too high. And you're not going to say that when you need the money or when you're getting the money. You're going to say that when you're not getting the money. So Ghana's back is against the wall. It's not a surprise that they're calling everything they can to call this out.